Hello, everyone. It's Justin Maxwell here, and I'm really excited to have with me today to provide a lot of insight around student loans, Michael Wheelwright, an operational manager with Student Loan Tutor, to just give us insights into what's been happening in the student loan scene, what are the solutions, what's the value of having student loan specialists in your corner as you start to attack that big, massive debt in your life, and just knowing what's in existence so that you can actually take action and have a lot of certainty around your student loans instead of it hanging over your life for 15, 20, 25 years instead. So, Michael, thank you for being here.
Yeah, I'm really glad to spend time with you, Justin. And of course, this is one of my favorite topics in the world, just because it's become commonplace for me about how powerful federal student loan benefits really are and how to use them. I'm used to it, right? I've been in the industry since 2017, and we've been performing what seems like miracles compared to traditional finance for all of those years. And the exciting thing is that the laws just keep getting better and better for people, not worse. Every president comes along and tries to create a new program or new benefits for all of the borrowers in the country so that they can have relief from the burden of their federal student loans. And for some reason, well, I know the reasons, but the government has a hard time explaining the benefits that are available for everybody. And they have some really systemic problems in the way their penalties are assessed and the way their customer service is implemented. It's kind of like a broken system that has really beneficial laws that people don't generally get easy access to. But once they understand it, it's just a complete game changer. Federal student loans are not a debt that should be paid down like other debts. And we can get as detailed into that as you want, but really, every dollar spent on student loans, instead of maximizing federal benefits that are yours to access as a borrower, is a dollar wasted, frankly. And I'm excited to break that down and back up those bold claims as we talk.
Awesome. I really appreciate that. I wanted to start specifically because I learned this from you was in the accounting space and the tax space, you have certified accountants that are authorized by the government to handle that for you because it's such a big deal. But in the student loan space, there isn't that like set by the government, but that's the role that Student Loan Tutor is trying to fill. Can you explain just a little bit the value that a specialist in the student loan space has for borrowers?
Right. So I love your analogy of when you have a complicated tax scenario, a CPA, a fee-based CPA, saves you money because they know their stuff inside and out. They know every loophole, tax code opportunity for you to maximize your benefits through the IRS. Well, it turns out that federal student loans have just as much at stake, especially for borrowers that have high balances. My company, Student Loan Tutor, specifically focuses on borrowers that have, over $80,000 in federal student loans, because when you have that much debt, a small mistake can be incredibly costly. And it's important to have professional expertise as you're understanding all of your legal options and what they actually cost you at the end of the day for your loans. And so as it stands, the federal government has appointed these kind of quasi-private entities called the federal servicers. And if you're a borrower, you know what I'm talking about, whether that's Nelnet or FedLoan or whatever it is that you're currently assigned to. And these servicers are paid a percentage of the debt that they manage by the government. And they are traditionally, $15 an hour employees with no minimum education requirements or financial background whatsoever. And they're there reading numbers off the screen with very little training, trying to help the best they can helping borrowers in this country. And, if you only have $10,000 or $20,000 in undergraduate loans, it's not that big of a deal. Some of the things are automated. And if you think that the only thing to do is just pay them off, like a credit card or a house or a car, then, you just go ahead and you do that if you have a small balance. But someone that has $100,000, $200,000, $300,000 from a graduate degree, chiropractic, or a medical doctor or a dentist, that balance is huge. It's on a par with a mortgage, and the interest rates are generally higher, right? Federal student loans, the stated interest rate is 6 to 8% is the average in the country. So that person who thinks that they've got to be paying that down quickly with $2,000, $3,000, $4,000, $5,000 a month payments for the next 5, 10, 15, 20 years of their lives, that is a drastic difference in their financial outcomes. The big hook here, the reason to be listening and learning about federal student loans and be trusting reputable professional assistance in this matter is because if you can get your payments to a reasonably low amount, and by the way, a $0 payment is a legitimate payment through the federal student loans by using what's called income-driven repayment. I can talk more about this. These programs have been around since the mid-90s. I'm not talking about anything new. It's just kind of new for people to finally wrap their heads around it and realize that student loans don't work like traditional debt. They just don't. You don't have to pay them off. They get forgiven after a set amount of years, and it's a fraction of the cost, and it's way better for your financial portfolio because then you're able to free up that $2,000, $3,000, $4,000, $5,000 a month and redirect that into wealth accumulation through savings and investments instead of trying to pay down a debt that the government is actively trying to subsidize and forgive for borrowers that understand what their rights are and what benefits they're eligible to receive.
I really appreciate that because I think this is a key point for me. This was a light bulb that went off in my mind is this is like one of the biggest financial decisions someone's make. And it's on par with specifically the people that have high student loan debt. It's on par with buying your first house because it's that big amount of money. And so having assistance, having someone walk you through what are the laws, how does this work, how do you strategize around this is vital specifically for those people with high student loan debt. So with that
Yeah.
said, can you explain a little bit about what these programs are? How did they originate? Why is it that there's misconceptions? And why is it that this isn't commonplace for people to take action on this? Why is it that people don't know about it?
Yeah, thank you. Let's just kind of hit the basics for just a moment. In fact, I think I'm going to share my screen just to kind of go over a little bit of the lingo involved so that it is crystal clear about what I'm referring to, which has such a massive benefit available to people with federal student loans. And then we'll talk a little bit about how our industry has evolved and public perception and some of the laws and articles and programs that have come out that have been confusing for people. But I'm going to go ahead and share, make sure I do this right here, this one. So again, a lot of information, but something that we're able to back up the claims that I'm talking about, right? We're making multiple $100,000 of differences to people's lives. And so it's important to understand what I'm saying so that you can verify it for yourself in whatever manner makes you feel good about finally getting the benefits that you are eligible for. So when you're thinking about federal student loan debt, if you haven't been following the news and you haven't gone through all the rigmarole yourself, you might think that the only way to pay them off is by treating it as a balance-based debt. That is traditional finance. Just think credit cards, houses, cars. You're paying off 100% of the balance plus interest. And of course, with high interest rate loans, you want to pay them off as quickly as possible, 10 years or less, to not get totally screwed on the interest accumulation. Now, you'd only want to go this route if you can't save money using income-driven repayment. So IDR is the acronym there, and this is what makes federal student loans unique. Every borrower in this country, regardless of their profession, there are some forgiveness programs that you actually get even more benefits if you work for a nonprofit or the government full-time. That's called public service loan forgiveness. But sometimes people think that's the only forgiveness when actually all borrowers qualify for income-driven repayment or IDR, and they have a 20 to 25 year cycle before their loans are fully forgiven. At the end of that 20 to 25 years, the balance is forgiven in the form of earned income. They actually get issued a 1099-C from the IRS, and they have to pay a tax bill at the very end of that. Now, again, it's a fraction of what they owe today, so this is why the numbers actually work out here. But when you're doing this, if you know your balance is going to get forgiven, you actually want to pay as little as legally possible over the life of the loan, because the dollars that you're spending on the monthly payments aren't going anywhere that benefits you. So it's important to navigate all of the rules around which programs. There's multiple IDR options. It's important to navigate which one is best. How do I document my household size and income? What kinds of loans do I have? Do I have older loans? Do I need to consolidate some of them? But it is possible to have $0 a month payments, which we have several thousand clients, and I would say probably 70% of them have $0 payments. And we're talking about a lot of professional doctors here with with exceptionally low payments because of how generous the Department of Education really is about how their guidelines are to create low payments in these scenarios. There is some paperwork involved, right? Anything just like your taxes, you got to do them every year. If you're going towards IDR and loan forgiveness, you have to use an annual recertification to keep up with your student loans. Okay. When you finally crunch the numbers of the difference in the total cost between using balance-based repayment versus income-driven repayment, we routinely save borrowers $300,000, $400,000, $500,000, $600,000 over the life of their loan by saving the money in the first place, and secondly, freeing up that cash flow and understanding that if you now have an extra $2,000 or $3,000 a month to put into your retirement accounts, and you compound that over the same length of time, that is immensely valuable, as Justin and other financial professionals understand extremely well and need to be listened to in that department. I'm going to stop there for now on the sharing of boring information and just kind of, you might think that, why haven't I heard this? Why isn't everybody doing this? It's really interesting. Student loans and just general knowledge kind of fell off the map over the last 3 years. That's part of it because of the COVID forbearance. The government said no interest, no payments for the last 3 years. We'll count all of it towards loan forgiveness. Try not to worry about your loans during these hard times. Well, that's ending, right? Payments are resuming in October. We're getting a lot of interest right now in our services because everybody's trying to get their ducks in a row before payments restart. So it's really important to take action. I don't know the timing of when you'll be listening to this recording. Hopefully you're able to get ahead of it. If you're after it, though, you could always fix problems, but better to get ahead of them if possible. At the end of the day, people have been, this is a little bit off the radar, right? It's been on the back burner for about 3 years. And prior to that, there was a lot of misinformation about, well, how real is loan forgiveness even really, right? At one point, when they first introduced the public service loan forgiveness program, there was an article that said, only a very few amount of borrowers actually got approved after they applied. What's not included in that story is that they had all borrowers apply for it, even if it wasn't 10 years, even though they weren't eligible for it yet, they were sent an email like they might be, and they all applied thinking they were supposed to, and 98% of them got denied because they hadn't completed the 10 years yet required to be eligible. So they then cherry-picked this data to make people feel a little, the mass media loves to share bad news about student loans, right? They don't share the good news. They don't share the big information. Another example of that, right? Biden was trying to pass $10,000 or $20,000 of forgiveness for all borrowers, and he basically failed, right? The Supreme Court shut that down. Now that's all over the news, right? Oh, let's make the president look like a fool. He failed us. It didn't work out. We're all upset about that. But at the same time, he also passed a new program called SAVE, S-A-V-E. This is one of the IDR program options, and it's already getting rolled out, and it is now the best option. SAVE is actually subsidizing all of the interest accrual while your payments are low, which is, again, mind-blowing. It's going to be hard for you to fully accept everything I'm saying until you've either done a lot of extensive research on your own or you've reached out for professional assistance, and we can take you through a proper consultation so you understand exactly what laws and which programs I'm referring to and how those numbers crunch. I can share general information, but what I'm trying to get across is my passion, my enthusiasm for this, and how important it is for you to finally look closely at this matter. Because I would love, if you've got over $200,000 of debt right now, I would love to lock in $500,000 difference in your overall life and your overall portfolio by freeing up that cash flow and saving money. So please stay with us on this interview. Pay attention. Let's get you this help. It's amazing what student loans have come to pass with student loans.
No, I really appreciate that, because this is like, I've had to give personal experience here. We have had clients send over to Michael at Student Loan Tutor. They've been able to help them evaluate what their loans look like, what's the interest rate, and help them choose the right program for them. And then once they're in that program, the relief, the emotional release as they come back to me to have discussions around where do we put that money now that it's freed up, that's the bigger win, in my opinion. It's the emotional relief so that you can go do and live a bigger life and focus on delivering more value without this big overarching burden of like, I don't know if I'm ever getting out of debt. This feels like a lot of money. I'm missing out on so many opportunities. Now you're not missing on those things. So I really encourage people, use a professional. Student loan tutor is an extraordinary resource. Reach out, have opportunities to speak with them. Now, Michael,
Yeah.
is there anything that you haven't mentioned so far that you think people that are still on the fence of like, is this real, is this not, that you think could drive home?
Yeah. Yeah, I kind of I've been talking a lot. I appreciate you bringing up the relief that comes from the perceived burden of the federal student loan, because, up until now, I was just talking about the money savings, but it's also the pain in the butt, right? To navigate that and to bear that emotional burden of feeling like you're in a, if you think you're in a $300,000 debt with 8% interest, like that's a really terrible feeling if you don't quite know how to get a handle on it. So, something I want to point out is it's about managing it, right? One of the reasons I'm so proud of building Student Loan Tutor and the company that we have is that we both do the consultations to help people really finally see what their options are and how to save money. But we also have a paperwork service to implement the strategy for them and take 99% of the work off of the client's shoulders. After signing on for our services, all we have to do is meet with a client for 15 minutes once a year, see how their situation has changed, and submit their annual paperwork. And in the meantime, we're the ones doing all the follow-ups, calling customer service, catching mistakes and escalating to managers and fixing them, and just letting our clients know once it's all done exactly as we promised. I want to share another couple of things that I think would be beneficial for people to see. You would think that getting just the free help from your servicer would be worth it as opposed to paying a professional fee, which we have very low fees considering to how much we're saving people and all of that hassle. But let me looks like it's okay, here we are. So just to kind of throw it under the bus for a minute and just be perfectly honest, the federal student loan servicer system is broken. There was an inspector general that audited all of the major servicers over a 3-year period, and he found that 61% of all of the reports they audited showed evidence of servicer failures. That might be the worst run government program in human history. Maybe there's worse ones, I don't know. But it means that every time you call up and ask a question, 61% of the time you're going to get the wrong information. You submit your paperwork, 61% of the time they're going to lose it or misfile it. And so what ends up happening is you've got to do a lot of due diligence. You're calling multiple times, making sure they did it right, following up. And that's a lot of time on the phone. And for a busy professional, being able to offload this massive problem is a really beautiful thing.
Well, I can just from my perspective is I hate waiting on hold. I hate talking to people that don't know what they're talking about, and I hate getting wrong information, then going after the back and fix it. And so the people that we're talking to in this video are business owners. They're people that are trying to be really efficient with their time. They want to spend time with their family. They want to get to their business. But if they're having to pull their family time into spending an hour or two calling their servicer every year and then worried that it might not be working, I feel like that alone, that relief and the fact that it's getting handled by a team member that's joining your team that you're paying for the service for, that's worth its cost no matter what it would have been, in my opinion.
Oh, yeah. And then I think, one more example where you're actually seeing how the numbers crunch. I don't want to overwhelm you with these numbers because everybody has a custom situation that needs to be looked at individually. But I think it's good to show just a couple of examples about how much is at stake here, right? Say you have $250,000 of federal student loans at a 6.3% interest rate. If you just pay it off like a credit card over a 25-year period, you would have to pay $1,656 a month every month for 25 years, and you're out $500,000 in paying off that federal student loan. Now that's a big deal. If you could get it down to 10 years, you would definitely save money on interest, right? So you could be paying $2,800 a month if you can afford that monthly payment, but then the total cost goes down to $337,000. That's a little bit better. You might also find that some bad articles or information out there will tell you to consider refinancing. please don't refinance without having a professional walk you through your federal student loans. If you refinance, even if they say they can get you down to like a 5% interest rate and save you a tiny bit more money, it's not worth it because you throw away all of your income-driven repayment and loan forgiveness benefits. Don't do this. And even still, it's massively expensive. If you could free up that $26.50 a month for the next 10 years instead of paying it towards student loans, you should. So what does that look like? We have proprietary calculators to make these calculations accurate and quick for our clients. And there's actually two plans that are coming out now. Revised Pay As You Earn has been around for a few years, and Save is the one that's coming out immediately. But just to give you kind of a rough idea, this same person with a $250,000 debt would normally be forgiven after 25 years. And in the older plans, they would still be accumulating interest. Their total cost might be about $160,000 in taxes at the end of a 25-year period. With the new program coming out, it's subsidizing 100% of the negative interest, which is huge. It means that the loan balance doesn't change. At the end of the 25 years, they forgive the $250,000. You got to pay taxes on that as earned income. Again, paying taxes on a $250,000 is only $92,000. That might sound like a lot of money, but I promise with the help of a financial professional like Justin, saving up 90 grand over 25 years is nothing. You need to save a lot more than that, actually, if you're trying to stay on top of retirement planning. So if we start to look over it, what's the difference here? Yeah, I think I was on the wrong tab as I was going over the calculations there. Sorry about that, Justin. But ultimately, I was trying to show the difference between the two types of plans, and I was just giving all those numbers showing that, it's pretty easy to do the math at this point. If they're subsidizing all of the interest like they're rolling out this fall, people are just going to be paying taxes on the forgiven amount, and they might pay $92,000 instead of $318 or $350 or $500,000, right? Which is awesome, right? Saving 200 grand or 150 grand on your student loans is great. But also freeing up that, $1,800, $2,500, $3,000 a month that you would otherwise be paying, that's where the real difference maker is made. And I would say we're routinely making a $500,000 difference for people that are willing to actually look closely at this and not let their feelings or any sort of research they've done in previous years that aren't the case anymore. I would say come into this with an open mind, really look closely at their options. And if it makes sense and saves you money, you might as well take the burden off as well and let us make sure it gets implemented correctly, do all those follow-ups. So yeah, I just wanted to go a little deeper for you, Justin, about how much is at stake with these things, because it is so powerful.
Yeah, and I think I really want to emphasize this too, because I think people sometimes when they hear it the first time, they're like, well, that sounds unbelievable or too much savings. But in my mind, it's not. It's very real. This is not fake or fluffy. This is actual data and numbers that can move forward. But in my mind, the saving on the student loan is the top of the cake. The fact that you get to use those dollars to plan for your future, that's what really makes it massive for me and for our clients that we're bringing to you, is because they are adding six figures to their portfolio that wouldn't have been there otherwise. There's some cases, like in some of our instances we've sent to you, it's been seven figures added to their portfolio that would not have been there otherwise because they chose to use your services. And that's a big deal when you look at the implications for if you want to retire a little earlier, if you want more financial freedom. That's a lot of money that wouldn't have been there otherwise.
This stuff is so huge, Justin, and the way that things are changing is really remarkable too, right? Because in the past, when people went down this road, they still had to kind of sit back and watch their balance go up a little bit over time. The interest was being subsidized 50%, but it was still growing. And now with this huge news of the plan Save coming out, there's really nothing at risk here. Even if you changed your mind in 5 years and just wanted to pay off your debt out of some sort of overt patriotism or something, you wouldn't have lost a penny because the balance would have just stayed right at that $250,000. In fact, you still would have grown your wealth because you would have freed up that cash flow over that 5-year period, and then you can shift gears later. So there's really nothing at stake for going down this road. And you're going to find, guys, you're going to be on the cusp of this. This is still a growing wave of understanding in the country. I actually spend most of my time presenting for financial advisors across the country, helping them educate and get on top of this and make sure they can bring this value to their clients. But I think even 5 years from now, it's going to be commonplace. Right now, there's only about 20 or 30% of the population that's using income-driven repayment and loan forgiveness programs. And they are often doing them wrong. They still have high payments. So they don't understand how to use it. They don't think it'll actually get forgiven. There's misconceptions. And I think eventually we're going to see almost everybody going into these programs over the next 5 years, because it just doesn't make sense to aggressively pay down student loans anymore. You just really need that professional assistance to make sure that you really feel like you've looked at the whole picture before going down this road, because it is so massive and so important that you get that help and that you understand it and take advantage of it properly.
I really appreciate you being here, Michael. Is there anything else that you feel like you've given us a ton of valuable information, a lot to act on, a lot to digest, but is there anything else that you think just as like, boom, here's one more point, here's one more thing of why you need this?
Oh man, like I said, I'm just really excited to have been in this industry for as long as I have, and to be able to share my passion for people. This is big, right? Like, we're helping lower middle class people that didn't have wealthy parents to pay for their schooling. You didn't have that one up, right? You didn't have that 1%er paying your college bill. You are building up from the ground level. And the cost of college has almost 4 times or 5 times. It's grown so much faster than inflation, right? You would think that college is more expensive now than it was in the 80s, but it's not. It's dramatically more expensive, right? So you're not getting a great deal by feeling like you're saddled with this debt and that you have this obligation to pay it off at the stated interest rate. The government recognizes that college is too expensive. Most developed countries in this world are subsidizing education even more than the US is. And so education is important. We want an educated populace, and we want people to stop being afraid of the crippling amount of student loan debt that they're going into. And so this is that relief that's been a long time coming. Another weird thing, Justin, just to throw it out there, is you might think it's a traditional debt, but guess what? If you get into $300,000 of credit card debt and you can't pay your bill anymore, you can go in and declare bankruptcy and at least start fresh, right? You're not a slave to that debt if you really have to start fresh. Federal student loans, they don't traditionally allow you to discharge them in bankruptcy. It's only happened a couple of times. And it's because you go in front of a bankruptcy judge with low income and they say, well, you can go to a $0 payment on these loan forgiveness programs. So you can't prove that this is an onerous debt and you can't get it discharged. So don't think that just because what I'm sharing here has such a silver lining and it's going to be so massively financially beneficial to you, you're not just taking advantage of a system and hurting somebody else or hurting the government. The government is trying to subsidize this education and trying to make up for past mistakes like the bankruptcy issue and all kinds of poor customer service. It's just finally time for people to get what they deserve. And this is a huge leg up for lower middle class people that deserve a chance to build real wealth in their lifetimes and be able to live a life with meaning and purpose. That is what their real soul's alignment is in with. And being burdened with unnecessary debt when there's a legal avenue out of it isn't doing anybody any good. It's important to understand the systems at play that control our financial world, because that's how we're going to break free and make a more beautiful world happen. That's why I'm so passionate about this work.
Right. I really love that ending. I think we'll end there. And if you're interested in meeting Michael, getting into Student Loan Tutor, the easiest way to do that is to just go to our website. It will be in the description. Go to biglifefinancial.com/student loans, and you'll be able to schedule a free call with me. And then I will get you connected over to Student Loan Tutor and enable you to go through that process so you can see it for yourself, learn the laws, learn the strategies, learn how it works, and learn what's available for you and your future so that you can do exactly what Michael just said, which is live the biggest life, align yourself with your soul, and stop worrying about something that has a solution. Focus on what you can solve and focus on other things that might be bigger and more impactful for you.
I want to give you some props here, leaving out here, Justin, as you do such a good job with the clients that you send over, because the biggest mistake I see is if people connect with our services and they don't have a financial education and financial support from a professional, the biggest risk here is if they go out and they free up $3,000 a month and they go out and they buy the nicest car and the nicest house and they saddle themselves with consumer debt, and then they're chasing that debt. And if they ever want to switch gears in the future with their student loans, they've kind of put themselves in a really bad spot. So it's really important to go through this process under the guidance of a proper financial professional, because then you're able to actually use our strategies for maximum benefit and really build meaningful wealth accumulation that protects you and your family and your legacy for future generations. And that's so important that you have that whole picture in mind as you're solving this particular issue, that just like Justin said, you shouldn't be worried about something that is solvable. Let's go worry about the 99 other things that aren't solvable. Let this one get crossed off the list.
Yeah, awesome. Thank you, Michael. I really appreciate your time today. Super valuable. I hope that people take advantage of this. I want to keep shining this horn and just poning it to the whole world, because this needs to be the standard of how you approach your student loans. You don't, this does the way that the government's handled it. This is what we're trying to do here. We have a voice. We're going to shout it out, and we'll do it many more times in the future if we need to. So you're always welcome to come back and shout it again with us.
Awesome. Thank you so much, Justin.
Yeah, thank you. Have a good one.